What if I could teach you one simple technique to dramatically increase the size of your winning trades? What if I told you this technique can be used for both long setups and short setups? My name's Steve Spencer. I've been trading for over 20 years. I'm a partner at SMB Capital. The techniques that I'm going to teach you in this video, if you find them interesting, if you want to learn about them more in depth, then just click on the link on the video and it will take you to a sign up for our in-depth trading workshop where we'll go over these techniques. Before we get into the actual trade setup itself, there's two things that you're going to have to learn how to do to identify this setup. Number one, you're going to have to learn how to identify a strong recent trend. And I'm going to show you in a minute exactly how to do that. Number two, you're going to have to learn how to identify a catalyst. And what a catalyst is just a news item that causes people to want to buy or sell a stock. Actually buy or sell a stock aggressively. And for the second thing, in a minute, I'm also going to show you exactly what this looks like. A catalyst is something like an FDA approval for a company that has a drug. A catalyst can be when a top executive leaves a company, like the CEO or a CFO. So those two things, number one, a stock with a strong recent trend, and number two, a catalyst. So let's take a look at our example. Oh, and by the way, this technique or this trade setup, what I call it or what I've named it is when people are trapped. And I'm going to show you exactly what it looks like when people or traders are trapped and why this gives you the opportunity to capture a larger winning trade than you might otherwise. Here is a chart of a higher time frame. It's about a 1 month period. We're looking at Baidu. It's in a very strong uptrend. On the left, towards the left side of the chart, there's an arrow there and it shows that the stock broke out about $240 and went straight up and then for a few days moved sideways. And so this is a great example of a very strong recent uptrend on the higher time frame. And as short-term traders, we're looking to capture trades on 1 day, 2 days, 2 days or 3 days would be considered a swing trade. But even on 1 day, sometimes we can capture a large move. When we're going to identify a trade, what we often do, the first thing that we'll do is go to the higher time frame. So instead of looking at the last 1 or 2 days, we'll look at the last 2 weeks or the last month. And in this case, we're looking at about a 3-week period. The first large move is to the upside. You see that large green bar above 240 to 250. And then for several days, the stock just moves sideways. We call this consolidation. And this is confirmation to the marketplace, to people who are watching this stock, that there are buyers interested at this stock at higher prices around 250. And then after this consolidation period, we have what is known as trend resumption. The stock starts to move higher again, and in a couple of days is up around 268, 270. And so more people are piling on. So initially in that first green bar, people are piling in, and that's why the stock moves higher. And then very slowly, it's moving sideways, being accumulated, but then again, a strong uptrend. And before you know it, after several weeks, the stock is now broken out above 240 and is up at around 280. So it's gone from 240 to 280 in a few weeks. That's a big move. And each time it moves higher, more people are involved in that stock. And they're feeling really comfortable. The people who bought at 240 are feeling great. They're up $40. The people at 250, they feel pretty good as well. Even the people who a few days before this catalyst arrives, who are in at 260 to 270, they're feeling pretty good. But they walk in one morning or they turn on their computer one morning, and what do they see? They see this headline. The top executive behind Baidu's artificial intelligence is stepping down. Now it turns out the executive was working in China, his family was back in the United States, something was going on with his family, he wanted to spend more time with them. And so as an experienced trader, you look at this and you say, hey, it's not like the CFO is leaving suddenly, that there was something wrong with their books, they're being investigated by the SEC. This is not a major scandal. It's important when a top executive leaves. It obviously can cause the stock to drop, but a lot of experienced traders, their first instinct will be this news is minor. Even myself, when I see it, I say, hey, this isn't that big of a deal. It's a really strong stock. It just went up $40. If it gaps lower in the morning, maybe some people will step in and buy, and that'll be the end of it. But here's the thing. It doesn't really matter to the people who are along from 260, 270, 280 over the last few days if it's minor news. What matters to them is when the market opens, if it fails to hold above 260 and all of these people are losing money, even if 10% of those people start to sell and the price moves lower, what that does is it attracts more sellers and more sellers. And so people are trapped. That's what I mean when I say for this setup, find a setup when people are trapped. The people who are buying at higher prices are now trapped. And so your instinct might be, as it comes lower and lower, I want to buy more and more. This is not the setup for that. There are setups when the stock moves lower, you want to actually buy. This is the setup when it actually moves lower, you have more confidence to pile in on the short side, and it's most likely going to move to much lower prices. So what I want to do is now look at a few of these charts to show you exactly what it looks like when there's a strong catalyst, a catalyst that's going to move the stock, and then we'll drill down on the techniques you need to use for this particular setup to enter a lower risk short trade. And so there's a few things we want to look at. So the first chart we're looking at here is we're looking at right when the news comes out, the stock immediately drops from 280 into the 260s. That happens before the market even opens. And when the market opens, the natural thing will be, will buyers step in where there was some support a few days earlier? If you look on the left side of this first chart, you can see at 260, there was some accumulation there for a few days, and it got above 265, and then pulled back from the mid-270s to 265, and then moved higher and made the new high. So we have two prices to key off of from the last week. One is 265, and one is 260. And right on the open, this is going to be the key. So let's look at the next chart. Right at the open, what we see is buyers step in. And what does that look like when the buyers step in at 258? You see those two large green bars, gets back above 260 and approaches 265. And normally, when something gaps lower on a news item, we expect buyers to come in, and what happens in the first 15 or 20 minutes will tell us whether or not those buyers will take control or whether or not they fail, and we have a good short setup and people will start to panic. And so we see the first two big green bars. Immediately what you see is after that is two red bars. It's back below 260. That is not good for buyers. That's not good for the people who bought right on the open on the dip, especially if they didn't sell right away. And it's not good for the people who have been buying for the last few weeks. So stage one is it's below that bottom blue line. It's moving sideways. Again, as traders, we call that consolidation. And the reason we like to use consolidation to enter a trade is it's a tighter range. We can define our risk, and we know that if it closes above the top of that range, above that bottom blue line there, that's where our stops are going to be, above 261, above 262. We also know that in that consolidation, we can start to build a position, a short position. So let me go to the next chart. So here's a chart where it shows you kind of the rest of the day. And that we still have that same consolidation there below 260. That's where we're going to look to enter initially on the short trade. Confirmation. Confirmation means we believe the trade is starting to work based on price action, is when that consolidation breaks to the downside. It's possible we could have gotten in there on the short side and it broke to the upside and we could have bounced that day, but it broke to the downside. And the first thing we want to see is either one, a failure of that bottom blue line where it was the opening low, or two, a bounce back up to the consolidation and a failure. We had a bounce back up to consolidation, a failure, and then it moved sideways for a couple of hours. Each time people buying at the morning low, you can see where I've put the arrow several times, they're buying at the morning low, they're buying at the morning low. But it drops that, and now at this point, the sellers are in complete control. This is a spot where a momentum trader will add to their short position. They will press because they're winning now. They're in from just below 260. Now it's below 258 at this point. And what we're looking for in terms of downside is generally in this type of trade is one ATR. I think the ATR for Baidu is around $7 or $8. So from 258, you'd look for a move down to 250 to 252, let's say. And the other thing that we'll do is, I mentioned earlier, not only are we sometimes looking for that one-day move, we're looking for a swing trade. And what I've shown you here in this final chart that we're looking at is what happens the next day. And remember what I said a few minutes ago. This is one of those trades that the weaker the stock gets, the more people there are to panic. And that's because when you look at the bigger picture chart, there were people buying it first at 240, then there were people buying it at 250. Each time it moves lower, there are more people who are now losing, and people, some people have a plan. When they're losing on their trade, their plan is to get out. Other people, they see the stock dropping, they see their portfolio losing money, they panic. And what we saw at the open on day 2 is a drop of the low on day 1, and we just saw complete panic, a complete erasing of the prior 3-week breakout from 240. Goes down to 240, the trade is done. Again, what I'll say to you is the link on this video will take you to our free trading workshop where that day 2 trade I discuss in detail how to manage the trade, how to enter the trade, how to take profits in the trade. So if you want a much more in-depth discussion, click on that link, go to the free workshop. So to recap for you, we want to find a stock that's had a recent large move. In this case, we're looking at Baidu, which had a recent strong up move and an uptrend. We want then a catalyst, but the catalyst needs to be in the opposite direction of the most recent trend. That's important. Number 3, we want to look on the open. We're going to watch very carefully in the first 15 to 20 minutes after 9:30. When the buyers step in, what happens? Does it go up and does it immediately come down, start holding below a key level? If that's what we see, that's exactly what we want to see for confirmation to get in on the short side. We don't want to just randomly do it willy-nilly. We want to see that price confirmation, the quick pop on the open, and then the failure, the consolidation below the key level. And then we want to remember that as it's moving lower, we don't want to think profit take, profit take, profit take, get out. We want to think, is it below the next key level? Is it consolidating again? It's going to attract more sellers. I want to look for that full ATR move. And if it closes weekly, then we want to look for that swing trade to the downside. The name of this trade again is when people are trapped, when traders are trapped. It's something, as I said, you can find it on the long side, you can find it on the short side. Maybe in the next video, we'll talk about a long setup. I hope you learned something.